Chapter 17, Security Valuation and Selection. Learning Objectives. Describe what is involved when performing fundamental analysis and technical analysis, and differentiate between these two analyses. Discuss the general factors investors should examine when evaluating the attractiveness of investments. Describe some techniques that are used to value the common stock of a corporation. Discuss the general roles professionals advise individuals to follow when investing their money. Fundamental analysis versus technical analysis. Fundamental analysis is the practice of evaluating the information contained in financial statements, industry reports, and economic factors to determine the intrinsic value of a firm. Technical analysis is examination of supply and demand for securities to determine trends in price movement of stocks or financial instruments. Economic analysis, forecasting business cycles. Business cycle is the movement in aggregate economic activity as measured by the gross domestic products, or GDP. Its expansion if increasing economic activity. Its contraction if decreasing economic activity. Economic analysis. Economic indicators. Leading economic indicators are economic measures that tend to move prior to or precede movement in the business cycle. Lagging economic indicators are economic measures that tend to move after or follow movement in the general economy. Industry analysis, industry performance and economic conditions. Cyclical industry, industries that tend to be directly related to business cycle, such that they perform best during expansions and worst during contractions. Defensive or counter-cyclical industries are industries that tend to perform best when the economy is in a contraction or recession, but are generally the poorest performer in expanding economies. Evaluating the firm's financial position using financial statement analysis, comparison to other similar firms, forecast directions for future, predicts earnings and dividends, and risk evaluation. What are fundamental analysis and technical analysis? How do they differ? Fundamental analysis evaluates the economy, the industry, and the firm to determine the firm's true or intrinsic value. Technical analysis examines the past trends and patterns that exist in the financial markets to determine the direction that the markets will move in the future. What general factors should investors examine when evaluating the attractiveness of investments? Be aware of the condition of the economy, the company's industry, and the company. What are some of the techniques that can be used to value the common stock of a corporation? There are three techniques: dividend discount model, P/E ratio, and economic value added. What general rules do professionals advise individuals to follow when investing their money? Give a particular investment strategy time to work. Have a basic understanding of the company in which you invest. Select firms with strong financial positions and a good potential for growth. Get out of an investment when it no longer meets investment goals, but don't make this decision on the short-term performance of the company.